I wish I did. I wish I did. Good morning, Jeffrey Dean. Morning, Victor. What is today? Today's Friday. Andy V. Grand Rising, my friend. Hope everybody's feeling good. Guys, at 10 a.m., we got all sorts of news coming. Core PCE price index, preliminary University of Michigan consumer sentiment, in case you don't know what all the acronyms are, and then the inflation expectations as well, guys. There's a big red box, and that big red box says, hey, it could disrupt your patterns. It could upset the apple cart. Be aware, set a note, set a timer, put something on your screen that says at 9:58, you're losing your advantage. And then let it sort out, and we'll see what happens. We're going to just talk today, guys. We're going to do momentum. We're going to do clear path. And we're going to focus on entries. And that's going to be the whole day, guys. And that's really what Nexgen is. Nexgen is taking advantages, 3 advantages. The advantage of a market that's very difficult to stop. The advantage of not having key areas in your way, guys. Not running into brick walls, hoping that they tumble. And then defining your entry. And when you can do that, you have a high probability trade. And a high probability trade is defined as a trade where each indicator on every chart agrees with the rules for the trade. Guys, this is the best of the best. This is the highest probability on NinjaTrader, and for the trend trade on TradingView so far, these are trades that offer the potential to win up to 70% of the time. Now, this is not the only trade. Guys, if all we could take was a high probability trade, there would probably be, I don't know, hours in between trades sometimes. And you guys just don't have the stomach for that. Most people don't. So when you learn to speak in terms of advantages, when you can look at your chart and you can say, I have momentum. My triggers are strong. Watch this, how we segue. I have momentum. Because momentum is defined by that separation between the triggers. I'm looking at this market. I know that the odds are favorable for it to continue up or to continue down. Or if you look at your chart and you say, hey, my small triggers have returned to the large triggers, I've lost that advantage of momentum. I no longer have rule number 1 met. Maybe I should pause. Maybe I should wait. And then you'll also be able to say, hey, I have a clear path. And what is a clear path? Well, I'm glad you asked. A clear path really just means that there's absolutely nothing in your way. It means that price, here we go, come on pictures, price has not reached an area and all the triggers have remained below resistance, or price has not reached Fibonacci support and all the triggers have remained above. Guys, that's what we call a termination condition. And a termination condition can stop the market, can create a big, ugly, untradeable bounce, could really upset the apple cart, and you will typically lose more trades trading into termination conditions than you will win. But areas break all day long. If they didn't, guys, we'd be stuck in a range forever. So there's a simple recipe. If price reaches an area and absolutely none of your trigger lines get through, well, then we're going to use the trigger lines to let us know when it's time to look for a trade. No triggers through, absolutely no trade. 2 triggers through with that separation, with that momentum, this is where a lot of you are headed. This is the potential to break, but it's not your best look. 3 trigger lines through that area. Now that area really has the potential to break. Now we're really leaning on momentum and entry, and we're going to find a way to capitalize on this medium probability scenario. But an area is not considered broken until all 4 triggers get through. So here's a little cheat sheet, guys. Every time your price bars reach an area, just start counting triggers. And if all 4 triggers made it through and they haven't hit the next area, you have a clear path. Momentum and clear path, guys. Back it up here. This is your core. This is your foundation. Does my screen not up? There you go, Sergio. No, it's everybody. Nobody said anything. Everyone's like, "Hey, Mark's talking, but we don't see anything." That's how I know nobody pays attention to me in the room. Guys, momentum, path, and entry. Momentum, hard to stop. Clear path, nothing in the way to stop that momentum. Once you understand these two concepts, you really do have everything you need to build a trading plan. You have everything that you need to find a way to capitalize on the market, what the software provides, what the market is giving, to be consistent, to be confident. Your first entry, or your third rule, is your first entry rule. This is the entry for the highest probability trend trade. And guys, when you have this recipe, this is a trade that typically wins up to 70% of the time. So we're going to focus on this. We're going to lean on this. We're going to do this. And even more so, I've already dropped them in the room, but I'm going to give you a plan. And on NinjaTrader, it's called the KISS plan. It is on TradingView too. And this plan is a stepping stone in your learning journey, guys. It is designed to teach you how to read your indicators, because reading your indicators is 90% of your day. Reading your indicators, waiting for advantages, getting excited about the idea that you have momentum and path, defining your entry, that's 90% of your day. 10% of your day is actively trading because your rules are met, because you do have strong triggers providing momentum, because there are no termination conditions giving you that clear path, and because you can define your entry. Guys, this is your stepping stone. This is your basis. This is your foundation. And these trades in this plan are designed to optimize your chances of success. Now, I've never had anybody follow this plan to the letter truthfully with their understanding of the advantages and do worse than 70% ever. I don't imagine you'll be the first, but if you have misunderstandings about what it means to have strength, or misunderstandings about a termination, guys, that's gonna change the probabilities for you. So that is where I encourage everyone in the room. Let me get to it. Post in the room. Tell me what you see. Tell me why you did what you did. Tell me what advantages were present. And every time you post in the room, if you go through this idea where you describe momentum, where you describe your termination conditions, where you describe your entry on the chart. Hey, Mark, this is what I saw. This is what it meant to me. This is where I entered. This is how I exited. Give me a private session. Talk to me about what I've done, and tell me if I could do it better. Guys, the people that post in the room the most typically end up where they want to be the fastest. So I do have people in this room right now. I'm looking at your names that don't show me what you're doing, and you're relying on the idea that, oh, I'll remember what he's talking about. I'll watch a video and I'll become a professional trader. Guys, that's not how it works. Michael Jordan had a coach. Wayne Gretzky had a coach. Serena Williams, Tiger Woods, all of these people had somebody that stands on the sidelines without a skin in the game, without an emotional attachment to the process, to help them do the process better. Take advantage of the coaching. That's what sets Nexgen apart. So post in the room, and guys, keep it simple. The plans that I give you are only 2 trades. The highest probability trend trade you could ever take, where each indicator on every chart agrees with the rules for the trade. And then from your ability to read those indicators comes the medium probability trade, the 50-50 trade, the potential to break trade, where 3 of the 4 trigger lines are through the area. It has management for both trades, and the management is different on both trades because they are different trades. For TradingView, same thing. Here's your plan. There's your checklists and ideas on management. Because every time you add a trade to your arsenal, every time you look for more, you've got to manage it differently. It's different advantages. So we're just going to trade live today, guys. We're going to go through. I'm not going to do 101. We'll click on your charts and we'll analyze them. If you need help with the very basic rules, guys, I did an extensive run on it yesterday. From the Nexgen Live, this first video right here covers the rules. It breaks them down individually. It talks about what they mean to you, and there is some awesome, awesome information on entries as well if you're working on entries. But today is Friday. We're going to trade today. So we're going to pull the trigger if the rules are met per the KISS plans that I dropped in the room, which means that we're only looking for high probability trades. And if it's a medium probability trade, there's a very, very specific set of instances that have to present themselves to even consider it. So we're going to be talking about momentum all day long, pointing it out. We're going to be talking about clear paths all day long. Good morning, Ms. Trina. And we're going to be defining entries all day long. When we start the feedback process, what I ask of you guys is to describe what you see so I can give you the best feedback. And I am not the trade police. I don't want to be the trade police. That's a burden that I don't need to bear. Guys, we're going to look at your trades and talk about the good and the bad. That's it. We're going to talk about the rules met, the rules broken. And just because you don't have all of the rules met, you may be taking a medium probability trade. My hope is that you understand that you didn't have one of those advantages. Maybe you even pointed out on the chart, hey, I know that I traded into a termination condition, but with the momentum in the entry defined, I just took a medium probability trade and I managed it. And you may say, all right, I didn't have the clear path, but with momentum and entry, right? And you're breaking it down, always going back to the advantages. That's the hope, because once you can do that, life is easy. The other platform is TradingView. We're going to talk about TradingView as well. We'll be defining direction with the small triggers. We'll be defining momentum based on where price is in relationship to the triggers. That's going to help you with the management. And once again, we're going to make sure that we have that clear path, guys. So I'm going to go through both. We can trade the NASDAQ on TradingView, 15-minute bars. We can trade, what do you guys think? S&P? What do you want to trade on NinjaTrader, guys? There's the NASDAQ there. NASDAQ's probably too fast for new users. We can, though. Smalls are above the large. Space between. Sergio, the NASDAQ is advanced for new users, and there's some entry nuance. But right now, I have momentum. I do, in fact, have a clear path. Because price has not reached the area, all of the triggers are broken above the area. And guys, your entry rules say, buy a pullback at an area inside of triggers. And you have to get it done before the market hits that red line. And if the market hits that red line, price has reached an area and all the triggers are below, which means that it's a termination condition, which means there's absolutely no trades into the area. We can see, yeah, Sergio, we'll go back and look at NASDAQ every now and then, just because I know you're trading it, but we'll focus on the S&P a little bit. Separation between the small and large. Let me make sure that I've got my synthetics. I do. Lets me know that I have momentum. Is everybody comfortable with that concept? Kerwin, Alex, Ron C. Separation is strength. Momentum is rule number one. There's your advantage. Price has not reached Fibonacci resistance. There's nothing in the way down here. My path is clear. The entry rules, guys, say buy or sell a pullback at an area. You're in the long already, Pete? Pete, I like it. Buy or sell a pullback. And a pullback is a small push down when everything says up. So buy or sell that pullback at an area, at a fib, at a midband, at a yellow 1-to-1 inside of triggers. And it means that I can see my triggers before the pullback ever starts. I can see my areas inside of triggers before the pullback ever starts. And if this market pushes down to that midband, my job, because my plan tells me it's a pattern that wins more than it loses, is to enter just above the highest point of support. And guys, I don't have a pullback yet, but I do have momentum and path. My job is to wait for them to come to me. My job is to wait for them to give me my trade. And that is a pattern that typically wins 70 to 80% of the time. Trigger lines define the retracement zone. That's where if they push down, they're most likely to push down. Areas inside of triggers define where the bounce is most likely to occur. Guys, there's two sets of triggers. There's the smooth ones. Those are your 5-1 triggers. And see these stepped ones? Watch this. Those are your large triggers from the large chart. Just moving averages. This is it. This is your high probability trend train. Let's see if it sets up. Pretty cool, right? Now, if something wins 70 to 80% of the time, typically, how often does it lose? This is the part nobody likes. If I'm taking a pattern that I can prove wins 70 to 80% of the time, every 10 trades, what can I expect from a losing standpoint? Guys, say it out loud, 20 to 30%. Did you know that you'll never know which ones will win or lose? You'll have no idea. You'll have no idea which trade will win. You'll have no idea which trade will lose. So the most important thing, and guys, we're there, so I'll cancel this one. The most important thing isn't the money, isn't the wins or losses, but rather it's the execution of the method. Because if I take the same trade 100 times and I win that trade 70 to 80% of the time, it's going to be damn near impossible for me to not get paid. Does that make sense, everybody? We're focusing on process. Price has reached Fibonacci resistance. All of my triggers remain below. My large chart says absolutely no trades. No more trades into that area. Mark, you don't have a clear path. What are you thinking? Why on earth would you trade into something that could reverse the market? So because my rules aren't met, because my plan isn't met, I'm not looking for an entry anymore. Guys, 90% of your day, 90% is spent reading indicators. 10% will be actually trading. So let's go and read a large chart here real quick. Does everybody see that the triggers are down? My voice is cracking. That means when the triggers are down, if I'm following the plan, I'm only looking for short trades. And I'm defining momentum by where the most current price is in relationship to those triggers. And there's three options. Let me pull up the picture for you. Let's learn to read a large chart real quick. I can be left of the trigger lines, I can be right of the trigger lines, or I can be inside of the trigger lines. Does everybody in the room see that I am above those triggers that are down, which would be the right side? Not the correct side, but the not left side. I am right of those triggers. So guys, when I am right of the triggers, I'm on the weak side. I now can gauge the momentum, and I know exactly how to manage my trade based on the location. So if I'm left, I'm strong side. This is the good side. This is the momentum side. This is the giddy up side. This is the bigger moves in 1 minute areas most likely to break side. If I am right of the triggers, this is the weak side. This is the, oh man, 1 minute areas are more likely to bounce. It makes sense to get paid at the area. GTFO, wait for the next trade. And if I'm inside of the triggers, if that price is dissecting the trigger lines, that's my transition. That's kind of a medium probability scenario. That's where I may choose to take profits in an area, get to break even, but see if they want to hold just a little bit longer. See if they want to run just a little bit more. And guys, direction is easy. It's either up or down. Room to targets is easy. You've either got room to make money or you don't. This is the management side that's going to keep you guys from leaning on hope and really focusing on a pragmatic way to get the most out of your trades. So the triggers are down. I'm on the weak side of the triggers. And my rules say when everything is going up, hit an area. And when you reach that area, don't just jump in. Rather, wait for a bar that closes below the small triggers. Does everybody see it? It's happening right now in front of us. The triggers are down. I'm looking for shorts. I'm on the weak side, which means if I enter the market, I'm getting paid at trouble. And my entry says, because my small triggers are up, my job is to take a close on the weak side of those triggers with absolutely nothing in the way, with room to make money. And we have 10 seconds 7 seconds until we know whether or not the trade rules are met. 4, 3, 2, 1. Boom. I'm in a trade. My stop will go above the pivot high. Because it's weak side, I'll take profits at the first trouble if it gets there, or it'll just stop me right out. I don't know what's going to happen, but guys, that's exactly what a trend trade looks like. Triggers are down. Weak side of the triggers, manage aggressively. Close on the correct side of the triggers, initiates the trade. Stop goes where the market should not. And the market should not go above that pivot high. The buyers were in control. They've already failed. The sellers have started taking over. Our hope is that they at least make that HVA line. And if they do, because I'm on the weak side of the triggers, I'm in a GTFO. I'm not going to hope that they run all the way down here. That was so close. Come on, sellers, get us. We're just going to let it play out. They're either going to get us or they're not, guys. They're either going to hit that profit target or they aren't. There we go. Congratulations. You just made $520. Guys, this is the trend trade that I teach every day, and it's very mechanical. Any questions from my TradingView users? Why we did what we did? Why we got paid where we paid? Why, even though we're up here, we chose to look for shorts? Because once you can answer those questions, guys, there is no emotion. All there is mechanics. All there is the mechanics of the trade, the execution of the method. Pretty cool, right? And look at it bounce off of trouble from the weak side. This is where I drop the microphone and take a bow. S&P is still going up. Only 2 triggers through. I have all the momentum, but with only 2 triggers through, I don't have a rule. I don't have rules met to take a trade. NASDAQ, smalls have returned to the large. I no longer have the momentum that I need. No areas inside of triggers. I can't define my entry. 2 out of 3 advantages gone. Why would I even look for a trade? It can go up without me, and sometimes it will. It just means that it's not your money. Are there any questions about momentum? Price on the right side, you take the trade? So, all right, Jerry, let's do that real quick. Thank you for saying that. Here, I'm going to build a chart. Boom, boom, boom. I'm going to create a new layout, and I'm putting nothing but trigger lines on it. And I think you'll like this lesson. I really do. All right, so here's my trigger lines. And I'm going to blow it up. And I'm even going to get rid of those large triggers because I don't use them. You don't need them on a 15-minute chart. So anything with large trigger gets 86. Boom. All right. So Jerry, in an uptrend, there's 3 places that price can be. It can be left of the triggers. This is strong. It can be right of the triggers. Whoops. I'll just cover that up. This is weak. Or it could be inside of the triggers, and that's transition. Does that make sense? Cool. So, do you see those triggers that were going down? When did it start up? A bar closes on what would be the weak side of those down triggers. So the same is true here. This is strong. This is transition. As long as they're down, this is weak. Right is always weak, whether it's up or down. Left is always strong, whether it's up or down. Does that make sense? That doesn't change based on direction. So if I'm looking for a short trade on my small chart to go down, I want to get in on the weak side of those up triggers. And if I'm looking for a long trade on my small chart, I want to get in on the weak side of those down triggers because that's where reversals come from. Let me pull up a couple pictures for you real quick. Let me get one where we can see kind of both charts together. Here's a good example. So the large chart defines direction with the small triggers. The small triggers are down. Everybody good with that? The most current price is on the strong side of the small triggers. What does that mean? Well, that just means that I'm going to manage it maybe a little looser and look for that bigger hit. And I have room to targets. And that's really the most important part, not trading directly into something. Are you with me so far, Jerry? Okay, so work with me. Do you give me a Y if you see that the large chart says down? That the large chart has momentum. Like everything's cool, right? So here's your small chart, Jerry. Pull back to an area. You see it? Now, if the strong side of triggers on the 1 minute chart is a fight, my entry is on the weak side of the small triggers on the small chart. Why? Because reversals come from the weak side. And what I want is this small chart to reverse to get in tune with the large chart. So what it does, your entry rule keeps you from fighting the immediate momentum so that you can get back in the good graces of the large chart. Let me know if that makes sense. And let's go back to the trade that we just took. The large chart still says down. Direction is always defined by the direction of the triggers. Well, first I'm defining everything that I need to know on the large chart. So I'm going to go through it. It's down, only shorts. It's weak side, get paid at first sign of trouble. So this is just the large chart read, Jerry. Do you see how price is all the way up here? Whoops. On the weak side of triggers. It doesn't mean that I'm not looking for shorts. It just means that I know exactly how I'm going to manage it. And I had room to targets. And I'll just take this box, and there's nothing in the way all the way to that area on the large chart. Are you comfortable with that, Reed? Because I think this is the most important part. This keeps you focused on the correct direction. This keeps you focused on exactly how you're going to manage it. And it keeps you focused on whether or not you've even got room to make money. So the second, and you can't even see where it happened, but the moment these small triggers turn up, my job, and you'll see us do it in the room today probably, is I'm going to say their small triggers are going up. Even though this chart's going down, I need an area. I need a pullback to 1-to-1s. I need pullback to a zone. I need something solid for the market to bounce from. So far, so good? But here's the deal. I can't fight those small triggers. So even though it reached 1-to-1s, I'm still on the strong side of the immediate momentum. And even though it reached the zone, I'm still on the strong side of that immediate momentum. 1 minute bars, guys, there's a lot of giddy up in those. But Jerry, look at this. That's a down bar going in the direction of the large chart, and the down bar finishes on the weak side of the small triggers. And that's where reversals come from. So I let this bar finish. That's why my entry is on the next bar. And because I'm on the weak side, I get paid at the first sign of trouble. So what we're doing, and you can even think about trend trades here. We let the market come back to the area, But our expectation on the small chart is that it continues down with the large chart. Did that clear it up a little bit? Because reversals come from the weak side, which is why we managed so assertively. And look what happened when it hit trouble from the weak side. Boom, that was it, game over. But that was a $500 trade in that little window because the rules were met. And notice that you never get a close below the small triggers again from an area. And the market just continues up all the way to trouble. So it's always letting the large chart lead the way. And I was telling somebody once, I was like, if you remember, if you memorize this picture, direction, how am I going to manage it? Is there room to manage it? Makes sense now. I thought the bar on the large chart. Oh no. The challenge, Jerry, is, so this is a 15-minute chart, right? So you can go from the weak side to the transition side to the strong side in one bar. You can go from the strong side to the weak side, to the transition. This is such a slow moving chart that we just let it define direction. We let it define momentum. We let it define areas. But as long as they're down, I'm looking for shorts. So technically, they're still down because they haven't pinched and rolled up. So if there were a close on the correct side of the triggers, on the weak side of the triggers, technically it would fit. But there's a point where you're going to grow a little bit and say, man, the termination held. They look like they're rolling up. The momentum is strong. Even if it closes below, that's probably not my trade. And especially because there's just nowhere to go if it does. There's a big wall of trouble right there. So the wait is on for a moment. Now they're up. I'm on the strong side, but I've got nowhere to go as of now. I've got a mid band and I've got a pink 1-to-1 right there, and they are going up. So what I need is things to work themselves out a little bit. I need to give myself a little bit of room to make money, and then I'll take a pullback, and then I'll take an entry. Does that make sense? That's what it looks like when the tides turn. And the market's just now opening, and clearly they wanted to gain some of the stuff back that they lost in pre-market when they fell like a brick, ton of bricks. But you see it now. Now we're up, and now we're on the strong side, which says, hey, these 1-minute areas are more likely to break. Let's get above trouble. Let's pull back. Let's look for a way to go with that market. But when it does pull back, the only way I'll enter is with a close on the correct side of the triggers. I love that. Thank you for asking that, Jerry. John Novak taught my room maybe a month ago when we were coming back to Texas. And he opened the day with, it's not that people are adverse to learning rules. Awesome, you're welcome. What happens is people create their own idea. I'll probably read them anyway, Victor. When you get back, repost them if you need feedback. I think everything you did made perfect sense. I don't know that you need feedback, but if you do, just repost them when you get back. I can't see when you get back, so it'll be easier that way. Right on. I'll get you when you get back, I promise. So guys, one of the things that happens a lot is people say, hey, I had strong triggers. I had rule number 1 met. And this is for my newer users. And what they really saw were trigger lines that were the same color. And they said, yes, this is strength. When the reality is, strength is defined by separation. This is the strong trigger look. Just because they're green doesn't make them strong. And what happens is if you never ask for clarity and you create your own idea of what it means to have strong triggers, well, then you're going to struggle. You're going to struggle following rules. And then the same is true on termination conditions. And let me go to one that illustrates it. And this is very common. Well, Mark, price got below the fib. The fib is broken. It's not in the way anymore. And I always have to reply, hey, We count trigger lines. So it's a misunderstanding that puts people in trouble. My triggers are red, they're strong. Price got below the fib, it's clear, and then they end up taking a loser. Do you guys see that? This is pretty normal. It's not that you don't understand, it's that you have your own understanding and it doesn't really fit the rules. So guys, this is why posting is so important. I had a gentleman, and I will call him a gentleman. He was a wonderful human being. And he sent me a message. He said, Mark, I have to talk to you. It has to be on the phone because you're full of crap. And I love it when you guys think I'm full of crap. I'm okay with it. It doesn't hurt my feelings. He said, I'm following your KISS plan and I'm getting the ever-loving crap kicked out of me. And I said, okay, cool. I said, well, I'm gonna tell you one thing before we even get into this. I've never seen one of your charts. You've never told me how you read the indicators. So I believe you, you're getting the crap kicked out of you, but let's make sure that you're following rules. I said, send me your last 10 trades. And he did. He went back and he took pictures of his last 10 trades. And what had happened was he defined strong triggers through trigger color, not separation. He defined termination conditions by price exceeding the line, not the triggers. And he defined his entry as a pullback to triggers, not a pullback to areas inside of triggers. And that's okay. 10 pictures, I knew exactly where his challenges were, and he participated in the room for a week, and we fixed everything. We also, on his potential to break, because he was having trouble, he kept trading against divergence and kept losing. So we corrected this one. We took 5 trading days. He gave me about 40 pictures, and we fixed every misconception that he had. And he said, all right, I'm going to go trade your plan. I'm going to go trade the KISS plan. And I didn't hear from him for 7 days. He took 5 trading days and the weekend to mull things over. And he called me Monday. And he said, Mark, I owe you an apology, which I appreciated, but it wasn't important. He goes, I actually followed the rules. And when I understood the rules, the plan is amazing. I won 83% of my trades. And then the next week, he won like 92% of his trades. And then the next week, he was in the high 80s. Absolutely, Kerwin. And wow, what a great example right here. But what the idea, guys, is that you have to understand the rules. And if you don't, if you create your own reality, then my plan is useless. So Kerwin, we're going to do this 2 ways. We're going to define a termination condition. So a termination condition means price reaches an area. Are you comfortable with that, everybody? Price reached red Fibonacci resistance. Price reached Fibonacci support. Price reached a divergence high. All you have to do is ask yourself, where are my triggers? And if 0 triggers through, it's a termination. No trades. No trades into it. Wayne, I will. I'm going to go through all of them, man. Do you have to leave? So Kerwin, what happens, cool, I need just a second because Kerwin beat you to the punch and he gets the lesson. So when price reaches an area on your large chart, and guys, the list is this list right here. Let me give it to you. So Kerwin, anytime price reaches a divergence high, a divergence low, Fibonacci resistance, Fibonacci support, or yellow 1-to-1s. This is your list. Memorize it. You don't have to know what creates the areas. You just have to know that these are the areas that can screw up your good time. Once price reaches the area, if none of the triggers break, it's a termination. It could create a big untradeable bounce. It could break. It could reverse completely. So price pulls back and reaches Fibonacci support. 0 triggers through, no trades. Price reaches not only resistance, but also the divergence high. The triggers can't break. And that's your termination. Does that make sense, Kerwin? So whether it's a divergence high or a fib or one-to-ones, you want to see something cool real quick, and then we're going to get to Wayne's. I love it when this happens. So Kerwin, we just looked at the NASDAQ right now, right? You guys saw that the picture I took was from the most current NASDAQ? Yeah, no worries. Terminology is a lot of it. And once you learn the terminology, it's just the recipe. I want you to see this picture from the NASDAQ. Where price reaches Fibonacci resistance and none of the triggers break, and it pulls all the way back to Fibonacci support and none of the triggers break, and it goes up and tests Fibonacci resistance again and none of the triggers break, and then it starts down. Do you guys see this picture? This picture is from 2021. This picture is from 3 minutes ago. When I say that the market is nothing but patterns, the market is nothing but the same thing every day. When you learn the patterns, it makes it pretty easy. Pretty cool, right? I don't even know which is which, but they're 5 years apart, 4 years apart. What did the NASDAQ do? Holy crap! It went down from there. The exact same way it did in that picture from 2021. Pretty cool, right? And then look, divergence high held again. And support held again. Rule number 2, keeping you out of a range. Awesome stuff. Kerwin, great question. Thank you for that. Wayne, let's get you taken care of so you can go build cool stuff. Does that help a little bit, Kerwin? You'll find that I use language a lot. Holy annotations, Batman. And I really do believe that if you learn the language, how do I define a termination condition? Price reaches, triggers don't break, that's it. It really is that simple. Awesome. So let's see what happens. The trend is up. It's weak side, room to trouble, pull back to the area, price closes above. Holy textbook, Wayne. There's your entry. Because you're on the weak side, you do get paid at trouble. Nicely done. And then you said, I'm just going to jump the fudge in. I hope it goes. And you get paid. And then you say, I'm losing momentum and things aren't great. I'm going to get in again. And I'm going to hope it goes. And then you say, my triggers have turned against me. I'm just going to hope it goes, and it doesn't. And man, that one was perfect, Wayne. That one was a little gutsy. That one was assertive. That one is damn near catastrophic. And that one just got even worse. And you took the perfect trend trade. And you just kept adding on when the advantages were gone. It had already reached the giant trouble. Do you see it? From 57, 59, you had already hit the solid wall. And I don't know if you made any money on those or not. Maybe you did. Maybe you're developing bad habits. But that's the perfect trend trade, right? That's the, man, I'm bored. It's 8:15. I want to do more shit because I think there's more money. Pardon my French, right? But look what happened, Wayne. You get paid, and then it breaks, and then it pulls back, and then it closes above, and it runs like a scalded dog. And all of that is nothing but headache and stress. Beautiful trend trade. And there it is again. I hope it goes. I hope it goes. It didn't go. I hope it goes. It didn't go. I hope it goes. It didn't go. Oh, there it was. And off it went, right? And then same concept. Directly, it did break, right? Price bar separates. Resistance becomes support, pulls back, closes above, and you go with it. And you go with it. I know, but it's even clearer right there. That was your entry, if you were going to take it. Same way that was your entry. Nice job. It breaks, it pulls back. All the momentum, giddy up. It's these little in-the-middle trades that cost us a lot of money, I think. Nicely done. directly into trouble. You entered on the way up. You entered directly into all the trouble. At 61, it was a divergence high. It was right, and it worked out for you. You say out at trouble. You were in at trouble. Congratulations, you pulled one over. Why? Because it was strong side. Zone wasn't there? Right on. Then perfect momentum trade. If the zone wasn't there, oh, I missed that. My bad. So you did have room at the moment. Nicely done. Boom, boom. Make some money. Short counter trend trade. I can't imagine why, but you did anyway. And it looks like you pulled one off, right? Maybe 63, 64. Made 8 ticks and then decided to go with the large chart. You're busy, Wayne. You were definitely busy. That was the same one. Whew. I'm exhausted just looking at it. In my own personal trading, and this is just my own personal trading, and I'm not making any comment on what you do. When I have this many entries and exits in the exact same area, I'm typically not following my rules. When I can go long, short, long, I'm not trading a plan. How could rules be met both directions, right? Just things that I think about. So if I look at one of my charts and I'm like, ooh, there's a huge consolidation right in an area, I'm typically struggling a little bit. Wayne, great trading. You have a plan. I know that you do. You do good things. Nicely done. All right, I'm going to scroll up. We're going to start looking at some other pictures. Paul, you said that one was for tomorrow's class. We got you. Pete. Dun, 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 dun. Scrolling. Victor, Pete, Victor, weird, Victor, Pete, Victor, weird, Pete, Victor, Paul. Does anyone think it's odd that the people that are posting in the room seem to be the people making money? Has anyone noticed that? That the people posting in the room, that the people requesting feedback, these are the people that seem to be profitable. Maybe you're being profitable back in the wings, not really doing, I don't know. All right, 15-minute up, strong side, room to trouble, taking trades directly into trouble. How'd it work? Minus 320. Hope it keeps going up. Guys, I call this the prairie dog. For whatever reason, you guys believe that if a bar closes above, peeks its head, that the area is broke. It's not. I'm telling you right now, the area is not broken. The path is not clear. You are trading directly into trouble until it separates and comes back. Until it does this line is still resistance. If you are on TradingView, give me a why. Whether you adhere to it or not, give me a why that you understand that. This is not a broken area. This is a broken area. Paul, this is a great picture. Nobody gets it. That's cool. I'm sorry. I'll be a better teacher tomorrow. Thank you for posting that, guys. This is a great lesson. This is one that you're probably going to have to weed out to find a way to make some money. Absolutely, Phil. I'll do that right now. You want NASDAQ or S&P? Man, I'm doing amazing. It's good to see you in here. Cool. So let me copy the link. There is my NASDAQ workspace. And let me copy the link. There's my S&P. They're the exact same workspace, Phil. You can just go through and change that if you want. But they're exactly the same. A lot of zones here, right? Let's spread it out. Strong side. Room back to trouble. There's your close above, but it's directly into a zone. right? But Jerry S., do you see how that's where the market finally started back up with the large chart? That's a great entry lesson. And that's the one that didn't close on the weak side. And look what happened. Push down further. You see 8 indicators. Is market flow on the chart, on your large chart? That would be the 8. It may be saved to have the market flow on there. If you want to check and see what we have, I'm missing one of the chart primes on mine. I don't have the Oracle on there because I can't figure out what it does. Oh no, it's 15-minute large chart, it's 1-minute small chart. 30 seconds, no. So this is your 1 minute. This is the one that uses market flow to give you HVA lines. This one, I have market flow on it. I don't know why. I don't have to. Watch that. Doesn't change anything without it. I run market flow on this chart because I use those HVA lines for momentum trades, and I can also use them to take advantage of tops and bottoms. Cool. Let's go look at some more pictures. All right. Strong top, momentum down, not so great entry. I don't disagree. Directly into 1-to-1s, directly into the midband, no triggers through, 1-to-1s or resistance, divergence prints, 1,000 things wrong with this trade. And Pete saw it start back down and said, oh shit, it's going without me. I guarantee it. Oh no, it's going without me. That's the only reason to enter right there. And then it does pull back right to the triggers. And then it heads down. You got away with one, Pete. Congratulations. You traded into 72 things that could have stopped forward progress, and they didn't this time. Good things happening to good people. Good things happening to good people. Guys, sometimes, and Pete, I know that you'll take this the way it's intended. Sometimes horrible trades will produce results, right? Sometimes not being able to find one thing that fits your plan will still result in money. But if you take this trade directly into terminations, not pulling back all the stuff, how often is it likely to win? In all honesty, you pulled one off. I love it. And the other thing is that sometimes the most beautiful trades, consolidation, sometimes the most beautiful trades will get slaughtered just out of nowhere. So it's not the wins and losses, guys. It's the consistency of what you're doing. It's doing the same thing every day. Let's read all the words. And Victor's coming back, but we'll talk about it. Trend trade. Can't get all of it on the screen. All you got to do is squeeze, guys. Price in transition. Ample space to the next area. Absolutely no pullback, guys. This is not a trend trade. This is not a trend trade. This is, oh my gosh, it's going. I'm going to jump the fudge in and hope that it keeps going. Trading view people, where's the pullback to areas? There's not one. That was all the way up here. And that wasn't even one. It was way up here. Now, guys, I'm not the trade police, but stop calling these trend trades. They're not. You have literally jumped the fudge in, hoping the market goes down. And you jump the fudge in directly into trouble, hoping the market goes down. Congratulations, you pulled one off. Guys, I don't have any qualms about telling you you got lucky. Now that's a trend trade. I don't know. We could probably discover it together. So let's go to dynamics and let's go to settings and let's go to inputs. Show VWAP. Nope. It doesn't appear to have anything to change the color. I mean, it's a bright white line. Sorry. All you got to do is trade into it enough. It'll stick out like you wouldn't believe. Don't ask me how I know, Phil. Now this is a trend trade. Triggers down, price on the strong side, very little space to the next area, but momentum down, so I risked it, taking a chance based on strong side. Small chart pulls back to the area, closes below, enter after the close below. With all the momentum from the strong side, 1 minute area is more likely to break. That's a trend trade. That's a pullback to an area close below. Why do I say that? And I want you to see why I say it. I'm a big fan of wise guys. I want wise guys. Hey. So the rules for a trend trade. If you're a rule following kind of person, the rules for the trend trade say your stop belongs behind the pivot high. Why? Because that's where the market shouldn't go. If I just jump the fudge in, my pivot high is up here in a different zip code. Does that make sense? Can I manage this like a trend trade? Guys, give me a Y or an N. Can I manage this entry properly? I can't. So what do I have to do? I have to make up rules on the fly. Maybe I'll hope this zone doesn't hold. Maybe I'll hope they don't go up at all. Maybe I'll just jump in and just pray for the best. Guys, knowing what you're in lets you know how to manage it. And if you call a jump the fudge in trade a trend trade, how are you going to manage it? And if you call a high probability trade a medium probability trade, you're going to manage it wrong, and so on and so forth. So when you name a trade, guys, make sure that it's really the trade. This time I use 3-lot, weak top, strong trending market, gets below trouble. So with 30 bars in the same direction, momentum is assumed. With all the triggers below trouble, the path is clear. Here we go. Jump the fudge in. And where does he jump in? Below the fib. He lets it get below trouble on the large chart, on the small chart, and he rides that wave down. Beautiful trade, Pete. Where does your stop go in this trade? Hell, I don't know. Is it a number? Is it a location? Is it above this pivot? But this is taking momentum and path and capitalizing. Really well done, Pete. Let's see what we have. Counter trend trade. Triggers down. Jump the fudge in against the triggers. Directly into trouble. I sure hope it works. What do you want? Well, he's not here, but small chart, price cleared trouble. It's just not a trade. White bar, I'm trying to figure this out. There's your termination, 612. You're in a zone until 20. I can't see what the enter is. You entered at 22. So enter directly into trouble with triggers down. It's a tough trade. Victor, we'll talk about it when you get back, but I'm glad you won. I'm glad you won. Other than the market reversing out of nowhere, it's all momentum and path, right? Do you guys see it? It's important to me that you recognize this. Strong triggers, room to trouble. I want you to just lean on that like it owes you money. Everything says up. Little momentum trade off the midband. Straight to trouble. Beautiful again, Pete. You're forgiven for the NASDAQ shenanigans. You got your head back in line. Good job. Did you guys know that all of you, no matter how amazing you are, will probably take silly trades now and then? We all do. Nice recovery. Trend trade is described by Mark. This is the one from the room, right? Pull back below, close on the correct side, out at trouble. That's a quick 240. Boom, instant. Halfway to a six-figure career. No HVA, but did hit midband. Usually has to hit order twice before fills. Who was this? I recognize the trade. Who was this? Help me out. I don't recognize the annotations. Is this you, Paul? Cool. What's interesting, Paul, is that there's no description on the large chart, right? You're not telling me that it's down. You're not telling me that it's weak. You're not telling me that it's room. I'm assuming that you know that, right? It's just assumed that at this point in your career, you're good with that. Here's what I don't think you realized. That is the accepted vernacular from the weak side. But you chose not to. And I know that it hit your stop. So guys, one of the reasons, and Paul, please take this as intended, one of the reasons it's so important to not skip this part of it. It hit the midband. Is because if you know how you have to manage, Paul, you're in at 53. You're out. Did it not fill you? Let's go look at it real quick. I want to see where it actually went to. Is this it? This is it. What time was it? 9:15. Whoops. No wonder I'm going the wrong way. It did not fill. 9:15. There it is. So the market went to 42. You had it at 43.25. So it went 6 ticks past you but didn't fill. Did you actually have it in place at the time? That's pretty impressive. So it actually blew through your order in place, hit support, came back up, and you never got a fill. That's weird. Usually has to hit order twice before fills. I don't typically get that problem. If it's super fast, I get it. It's a great trade. One of my thoughts is if you hit me and don't fill me, I pull my stop because it's already gone to where I want it to go. Does that make sense, Paul? So it's a beautiful trade. It stinks that it didn't fill your targets. I believe it is, Phil. You gonna come take some of Nexgen's money? So if I get hit, my stop comes down because, man, it's already gotten where I needed it to get. Does that make sense, Paul? I've done this before where I haven't been filled and kept things in play, and it's whipped my butt. So I've changed my ideas on it. I love the trade, though. It's a great trade, Paul. I know it's a great trade because I took it too. It fit the rules perfectly. Termination. No rules here, just time on the pond. I love that. What Pete just told you guys is when you learn to read your indicators, you're going to find more. Perfect termination, weak triggers. There's no reason to take this trade. You jump in with every indicator up directly into Fibonacci support and hope it works. Why? Because when you hit all these areas with weak triggers, that's a good spot for things to stop. Super aggressive. I'm glad it worked out. Nicely done. Phil. There you go. Just click Start My Evaluation. Cyber90 is your code. And then, Phil, when you pass your evaluation, taking beautiful trend trades, when you do your activation fee, it will credit it right back to your account. So you'll start up whatever you had to pay to activate. That'll already be in the account almost instantly. So Guys, it's 90%. You guys that are comfortable in your plan, go buy 5 of them and use the copier. And then keep your wits about you. Keep your wits about you as you trade. You guys ever heard the phrase, dance with the girl you brought? One of the biggest challenges that I see in the funding company is people are consistent. They're good, they're good, they're good. And you guys heard the Mike Tyson, everybody has a plan until they get punched. Once you guys get punched, I watch people's accounts just disappear. Nobody ever loses an account over 4 days. It's typically in 45 minutes. Keep your emotions in check. Feel them, listen to them. If you hear them, walk away. Not a trend trade. If divergence low is at an area, price tends to blow past the area inside of triggers and get to the reversal bar. That's a pattern that you can prove wins more than it loses. That's a pattern that fights momentum. That's a pattern that fights direction. That's a pattern that fights everything. That divergence, I think, is one of the biggest keys. That divergence, that loss of momentum typically pushes it higher, and it did. Nice trade. And I skipped that one on purpose, Ron, just because I like it when you talk to me. When everything is railing north, Ron rails north with it. If you're going to fight, fight it all. Go down in flames, right? Guys, this is the chili dog. Strong trending market, momentum, nothing in the way. Get in. It's just momentum. Get out. Get back in. Get out. It's okay to get paid. I think that's one of the biggest challenges that people have is a reluctance to take their profits when the profits present themselves. Great job. Wow, look at that. Ninja Trader crashed. All right. Triggers are up, right? Let's read it, guys. Where's the current market? There it is. Triggers are up. What side of the triggers am I on, my friends? Am I on the strong side, the weak side, or the transition side? What do you think? We're on the strong side. You're darn right, Miss Trina. What does that mean from a management standpoint? Do you guys have a plan on how you would manage a trade if you got one? If you don't, guess what? I know a guy. That's where good stuff happens. That's where 1 minute areas are more likely to break. So it's nice knowing that before I ever take a trade. I've got room. There is nothing north of me. So the only thing I need, guys, is a pullback to an area and then a close on the correct side of the triggers. That's the only thing missing in my life. Is my entry rules being met? Large chart says giddy up. Do your thing. Life is good. Small chart says, I just don't have one for you yet. Relax. We'll get there. All right, guys, I'm going to take about 3 minutes. When I come back, Trina, I believe we're going to start with you. NASDAQ's calculating, guys. I'll let you watch the NASDAQ. It's a lot of fun. Even Red News was a dud. Right on. When I come back, Trina, we'll start with you. We'll do live chart reads with all you guys. If the rules are met, we'll pull the trigger. What are we up so far today? We're up 500, following the most basic plan. I'm not sure you can do it with the system on. Adam, give me 1 second. When I get back from break, that'll be the first thing we do. Do not let me forget. But I drank a lot of water. I know, Sergio, you're in the lineup too. I didn't get through all of the pictures yet, but I drank a lot of water and we made it through the first hour, and I'm just not going to lie, guys. I got to go pee. So I'll be back in a second. So here we go, getting back. Woo, look at the NASDAQ go. A lot of fun. Let's go look at some more pictures, see what's going on. All right, Miss Trina. Boom, bang, bing. And then we got Sergio. We got Sergio. We got Ron's. And then we got Mr. Engineer. I like it. All right, let's see what you did, Miss Trina. So the triggers are up. They're in transition. And it says manage. I love that. Guys, I love it when you do this. Transition manage, right? Room to target. So what happens? The market pulls back. Don't fight, don't fight, don't fight. Giddy up. Not the best entry, but above large chart trouble. So you took a shot into trouble, right, Trina? Was it a calculated risk based on the large chart? Target made. Perfect. Transition. And this would be one of those ones from transition, Trina, where you could have taken half, gone break even, and see if they want to make that next level. And they certainly did, didn't they? That's what transition means to me. I'll take half and go break even. Nice job. To something solid, right? Down, strong, room to targets. There's your pullback. Close was not on the right side of the triggers. Breaking rules this time. You take the entry anyway. Target made. So Trina, from the strong side, you took a chance. Can I show you something that's cool? Like you're going to say, no, Mark, don't show me anything cool. All right. You see the breakout bar? So breakout bar down, looking for shorts. Those horizontal lines are the highest concentration of sellers in that breakout bar. Did you know that? There's one more piece to the puzzle here. When the next bar opens below that HVA line, it typically, when rules are met, goes down. So it's an awesome bar pattern that you may not even know about. But if I'm going to take a shot against the triggers, notice that your large triggers are still down. That's a good sign. Your small triggers, you know. And then that opening right there, if I'm going to take a shot, that's it. I love the way you took this trade. And then great job. Target made. So let me give you guys this picture. For those of you that love to study bar patterns, that's a good one. That's a good one. There's a lot of information in those HVA lines. It's a little more advanced, right? Learn the basics. Down, trans, room to target. Close on the correct side of the triggers. You had $40 to get to trouble from the transition side, right, Trina? You had $40 to get to trouble. And guess what? Trouble held from the transition side. That's the dang it went without me. All the way down and I didn't get paid. I'll catch it this time. Just no room. That's the challenge. Do you see it? That was your close below. And then from 30.50, you're already there. It's okay. Got to do those every now and then. Sergio. Oh, Adam P., you let me forget. All right. Sergio, are you with me in here? 3 triggers through that one, right? How many triggers through this one? How many triggers through this one? So I've got 0 here, termination. I've got 2 here, that's cool. But that's the only one with 3. I'm not even going to look and see what happened yet. So I want you to just recognize that it's not the line that you're hoping breaks. You've got to look at all the lines that price has reached. But you take the perfect entry. The perfect entry with very low risk. And you're looking to get paid at trouble. Nice trade, Sergio. But you got to pay attention to every line. Nicely done. Good looking entry. Does that make sense? And I think you posted the same link. You did. I know you have a second picture. Will you double check for me? You posted the same link in the room. That's awesome, Z Robot. My thoughts are I can't read it. I don't get it. It's way beyond my pay grade. I would have to sit down and study it, and I can't do that. What? Z Robot, I can't look at this in a fraction of a second and have any idea what you're talking about. And it's, I'll look at it after class, right? Message me, I'll look at it, but I'm not going to sit here and try and dissect your flight plan during classroom time. That's tough. I'm just not that smart. I want to be. It's a logical flow chart. Right on. I'll look at it after class. I can't dissect it in class though, because it's nothing that I'm even a little bit familiar with. Yeah, Jenny could. Jenny's not here. Momentum. Hey Sergio, look, it's your trade. Pull back to the area, but it's on the S&P instead of the NASDAQ. Yeah, I'm going to look at it after class though. That stuff interests me. I just can't try to pick it apart. Potential to break. Pull back to the area inside of triggers. Easy money. Nicely done, Pete. Sergio, isn't that cool? His trade looks exactly like your trade. 2 totally different markets. I love that. It's just patterns, guys. It's just patterns. Did you find that second trade for me, Serge? Sergio? And balance off. Didn't we just look at this one? No, that's a different one. Look at that. Momentum, path, pull back to the area inside of triggers. He did it again. Rinse and repeat. Holy smokes. That's pretty cool. I thought I was looking at the same trade. Didn't you guys? Pull back to the area inside of triggers, get paid. Pull back to the area inside of triggers, get paid. I thought it was the same trade. Nicely done, Pete. Phil, my in-laws have deer mounts on their wall. Not my jam, but you would mount pictures of awesome trades on your wall. I love it. The ES is giving it away, huh? It was the same trade. They're all the same trade, guys. Well, the closer they are all to the same trade, the easier it is. What does the NASDAQ have? NASDAQ has a weak top, odds favorable, directly into a fib. I got to relax. I got to wait. I need to get 3 triggers through. Gap theory's not in play, so we're going to see what happens. While we see what happens, let me open the ES back up because that's from my crash. Oh, you know what? I don't even have an ES because I had to build a new one. So let me build a new S&P. Ooh, hold on. Adam, are you in here? Adam, I even told you let me forget, and you let me forget again. Let's go see if we can find that reversal bar marker. And I don't know that it's going to be on that workspace that John Novak gave you. So we're going to go to Pro Trader. And we're going to scroll down, one-to-ones. Nope, we need Pro Trader Synthetic New. That's why you don't have it. Because it's under the synthetic, not the regular. And without those synthetics on there, you're not going to see it. So if you want them, you're going to have to put this one on there, and it's going to change your workspace a little bit. But there's your reversal bar marker 1. So you could try to add it and see if you still like the workspace. And if not, just close it and don't save it. You bet. 3 triggers through. Man, look at the NASDAQ go. Guys, this is why the NASDAQ's difficult. Look how fast that is. If you're unsure about your plan, this is difficult. Does everybody see momentum? I hope so. Do you see that there's only 2 triggers through that line, even though you see 3 through this one? It was literally a second ago. Look at the timestamps. This is why the NASDAQ is so difficult for new users, guys. 10-20-20, 10-20-30, 10-20-50. It's like 20 seconds. It's like 20 seconds. NASDAQ's fast, guys. Let's build an S&P workspace real quick. You guys ever built a workspace? I'm going to show you how. Are there any rules you missed on that 50-50? Not from a strong top. Divergence. Did you take it? Not from a strong top. Big red flag. 3 triggers through is nice. That divergence is the one that says if you took it, GTFO. And sure enough, divergence killed it, didn't it? Pretty cool. Nice. All right, guys, we're going to build a new S&P workspace real quick because I don't have one. Let me get a couple charts together so that we can watch it. I think the NASDAQ, I can trade it. Not going to lie. I can read it that fast. I know my rules so well that the NASDAQ doesn't frighten me. Never has. That's not true. It used to. But if you're not at that point, it's just frustrating. There's a lot of getting run over in the NASDAQ if you're not in tune with the rules and how to trade it. On Renko charts, let me rephrase that. On Renko charts. All right, I'm building a couple charts over here, so let's go over here. Strong side. Oh no, not really an area. Outer bands aren't areas, guys. Outer bands aren't areas. You want something solid, and you may get bounces off of them. But we don't define those as areas. Those are not on the list for entry. Jerry, I think the NASDAQ is 1,000 times easier on TradingView. Because a minute's a minute, right? There is no 73 Renko bars in a minute. There is literally 1 minute bar. Guys, my rules say that my next trend trade comes from down here. And if I don't get it, I'm just going to have to watch it run away a little bit. All right, here's our S&P. Looks like termination conditions doing its job. Let's see what the big chart looks like. We are strong trending, but we haven't cleared yet, which means just have to sit on my hands for a minute. Just have to relax, kick back, do nothing, smile, all the things that make us happy. Let me save that though, so I have this later. Where are we? Did I miss something? I don't think I missed anything. I think we've got everybody right. So now we're back to live trading and you guys asking questions. So a strong trending market is defined as 30 plus bars in the same direction. We have it, guys. Momentum, rule number one it's there. But in a strong trending market, you still respect termination conditions. It's not carte blanche for just trading into red lines. And look what's going on. Divergence from 1-to-1s, pivots, stop out, no areas inside of triggers, everything's below trouble. Guys, there are no long trades here. The flip side is that right here, in a strong trending market, with all 4 triggers above trouble, the accepted role is keep buying the midband until it doesn't work. And it worked. Victor, will you repost for me so I don't have to go chase? And back here, there's your pullbacks right to the areas. 3 triggers through, pull back to the area inside of triggers. There's one there. There's one there. Over and over. All right. Let's go through it, Victor. Counter trade. Why? So here's I'm gonna get you a little bit on this, okay? Why did you decide to go counter trend? The large chart's down. You're on the strong side of the triggers. Why? What possessed you on the large chart to consider counter trend? No. From 25, he's on the strong side. Anticipating a move up before the continuation down. So your answer is no reason at all. That bar hadn't formed yet, Andy. This is historical. So you had no reason on the large chart other than you were waiting for a short and you got bored and wanted to wait, which is okay. All right. How has that served you in the past? How about this? First, it's a termination condition on the large chart. At least let it hit something solid, right? Give it a prayer that maybe they reach something that might put in a bottom that would create that bounce. Does that make sense, Victor? That's a nice place to start. And Nexgen actually has a plan that says if you reach a termination condition on the large chart, if your small triggers break above the large triggers from that termination, if the market pulls back to an HVA, go long. That's an HVA trade. What you didn't have, Victor, was a pullback to the HVA. Does that make sense? There just isn't one. But I'm gonna go in a little further. Everything starts with a termination condition. If you're going to go counter trend trade, guys, and you try to go counter trend here, hoping to catch a long to a short, you're probably going to get run over 9 ways to Sunday. But when it comes from a termination, it's helpful. When your small chart starts to show change, small's above the large, it's helpful. What this is, Victor, is a momentum trade after a termination on a large chart. Now, I don't think you were here for the lesson for Miss Trina. So we're just going to dissect it because this is fun. She went short. This is a breakout bar. Are you comfortable with the breakout bar concept? White bar, down bar. It's a breakout short. And the horizontal lines are the highest concentration of sellers in that bar. Does that make sense, Victor? I can't remember if you're comfortable with this or not. You are. I like that. Sweet. When the next bar opens below, when the rules are met, that's typically where the drop down comes from. So I want you to see what you did. Whoops. So there's your breakout bar up. Same lesson. Breakout bar up. The horizontal line is the highest concentration of buyers in the breakout bar. Next bar opens above that HVA. So Victor, what you did is you reverse engineered hers. Breakout bar down, highest concentration of sellers. Next bar opens below it, and her large chart was perfect for a short trade. Your large chart said if you're going to take a shot counter, you got a pretty good shot because it had reached a termination. That's the most important. Because it reached a termination, smalls get above the large, pulls back to the trouble spot, and then that bar right there, Victor, says, okay, let's give it one shot. I like the trade. I really do. But guys, going counter trend because you hope there's a short coming is a rough way to run a business. Going counter trend because you have rules. It's not my reasoning. It's the rules. It's the rules. It's the emotionless, pragmatic, already studied and defined by Nexgen, handed to you in this trading plan. So check this out. HVA trade. Zone reached on the 15-minute chart. You had it. 1 minute triggers above the smalls above the large from the low. You had it. Now this is what you didn't have yet. But I gave you the cheat, Victor, on using that white breakout bar. It just fits the rules, doesn't it? And if it fits the rules, don't you feel better about taking the trade? I think so. I could be wrong. I love it. No, because you didn't pull back to the HVA line. An HVA trade originates right here. So what you did with this is you said this, if this is an up bar, it's going to produce that line. I'm just going to go ahead and take it because of the way this bar opened. John Novak did a master class on this. John Novak taught for an entire week on this pattern. If you want to look at it more, and I think that if you're at this point where you're done with trend trades and you're ready to start going counter trend, this video is a must see. I would probably watch it twice. There you go, brother. Ta-da-da! Good stuff. How about this? Potentially it could have been disaster because you fought the large chart. Victor, this is why I don't teach HVA room trades in the room, because most of you don't have the patience to wait for the rules to be met. Most people say, oh, look, red line, go short, right? Oh, blue line, go long. And it's just there's more to it than that. I don't teach counter trend. Guys, if you choose to go counter trend, that's your business. I'm not the trade police. Everybody's heard the story. Hey, John Novak, I can pretty much guarantee $1 million in your account by the end of the year. Really, Mr. Broker, how do I do it? Fund it with 2 to 3 million. Go counter trend. You should be at $1 million by the end of the year. So there is a way to do it. I love it. I love that trade, Victor. I love everything about it. But if you don't have concrete rules, there are no safe trades. Safe implies that you won't lose. There are no safe trades. All there are trades with a statistical advantage. All there are trades that you can prove win more than they lose. That's it. Language. Language is important. Strong trending market. All the triggers get above. There's your pullback. Jump the fudge in, make a little money. Nicely done, Pete. All right, Adam. Great support holding. Second higher divergence. I love that. You get in, get out at trouble, break even, stop. Beautiful trade, Adam. Every trigger line is above support. You have momentum, smalls above the large, and you don't just arbitrarily jump in. I love waiting for the second higher divergence. All of your smalls are up, synthetics are up, and you get out at trouble. And this is where, Adam, are you with me in here? This is where one of my favorite moves is when I get out here. I love to protect my position right here. If it comes back and gets me, cool. Getting out at fibs is nice anyway. And if it doesn't, if it just runs, I'm good. And I'll do that. Let me see if I can find. I did it right here. When I got to trouble and it got below it, see where my next contract came off? If they get me, who cares? I made a lot of money. I don't give a lot back. And if they decide to run, awesome. Let them run. Every now and then they do, but more often they don't. I love that scenario. That's my own personal management. You can use it, you can not. It's up to you. I don't tell you guys what to do. Great triggers. Why was it a good bottom? What made it a good bottom? Pull back to the area inside of triggers. You get in. Looks like you made money. Took your first profit, moved to break even. Right on. I like it. Getting paid, right? That's the goal. Made 100. So why no entry here? Down lower. Did you just miss it? Or did it not give it in time? I like it right there on the good side of those triggers. Gives you a lot of room to make money up to trouble. Gives you a lot of room to make money up to trouble. And then you're already break even with a couple hundred in the bank. Great looking trade, Adam. Nicely done. All right, triggers down. Strong triggers. Perfect entry. Awesome profits. Nothing in the way. Second divergence. I agree. Should have managed out with a second. At least taken the risk off, right? Because now you're getting signs directly from a fib that things might be changing. This is where you may say, man, I'll hold, but I'm not going to risk anything, right? They're already telling me. Nicely done. Both targets hit eventually. I love it. Momentum and path on the big one. Nicely done, Adam. You appear to be finding your groove a little bit. You incorporating a few things? Is it making it easier? It looks very effortless the way you're presenting it. And of course, I don't know. I'm not there, but I like it. Look at that entry. Rock star. Working on winning percentages, no termination in the way. Nicely done, man. Great work. Organic. Everything up. Pulls back to your zone, the HVA, closes on the correct side, and you go up with it. I'm assuming that's some sort of zone. You have some indicator going on there. Nicely done, organic. When everything says up, go up with it, right? When everything says down, go down with it. Beautiful. You guys are good at this. Did you know that? Holy no way. It didn't happen again, did it? Is it that one again? Like that one? Like that one? Can we start to create expectations based on patterns? I think we can. Do you guys see that? This is the S&P right now. This was the NASDAQ earlier today. That's the one from your trading guide from 2021. Victor, on TradingView, are pink 1-to-1s areas for a bounce? Absolutely they are. Absolutely, 100% they are. But if you get in here, do you have any room from the weak side to get to there? Watch this. There's your large chart trouble. That's the bottom of trouble. You're not above trouble until there. Victor, remember when you reach a termination? This was a little beyond. There's your breakout bar down. There's the open below. There's the push down. Pretty cool, right? There's your breakout up. There's your open above. There's the push up. Holy crap. So everything's up, right? I love it. Give me a deeper push. Give me a deeper push so I got some room to make money. You guys with me on this? All right, Victor, there's your 1-to-1s. If I get a close above, I don't have a lot of room to make any money there. And from the weak side, I just don't care for it. You're missing all the HVA lines on your small chart. How do you turn them on? Show me a picture of your small chart real quick. And did you just open it? Call your shots, Victor. I love it. So, Trina, if you watch, see all my HVA lines? If I close TradingView and I open it back up, market flow starts over. So now I don't have all the lines. So you're not missing anything, but you'll see it start back up right here. I just don't have anywhere to go. That's the challenge with what's happening right now, is I just don't have any room to targets. Does that make sense, everybody? First it's up. Weak side, I need room to targets. That's my distance to 32. So maybe if we bounce down a little bit, give me a close above right around 22, I got tons of room. Hasn't given an entry yet. There's your mid band. Thanks, Victor. First it's up. Weak side. Need a close on the correct side. We've got a whole minute to think about it. And guys, true story, I love it when this happens. Because what happens when it goes to the next bar, these small triggers come down a little bit. Oh, are they gonna do us dirty? Are they gonna run without us, Victor? Is everybody with me? First it's up. Weak side, I know how to manage. From where I'm at right here, a close at 2150 gives me tons of room to get to 3250. That's 200 per contract. The only thing I need is I need an up bar that finishes not only on the good side of the triggers, but it's got to be above those 1-to-1s too. I can't trade directly into those 1-to-1s. Well, Mark, isn't that one of those prairie dogs? It's not. This is the area we're trading from. We're not hoping that the area breaks. We will be trading from the area. Directly into the 1-to-1s. It closed above, but it closed directly into the 1-to-1s. And look at that, Victor. It opened below the HVA line. Look what it's doing. Holy crud. Pretty cool, right? That's what we call an avoidable loss. Anybody go long and just said, F it, I sure hope it breaks? I hope not. I hope not. Trading is an amazing thing, guys. Trading is a wonderful thing. There's two sides to trading. There is the I'm so focused on my plan that I only have two options. I either have my rules met or I don't. That's the effortless, easy, life is good, nothing stresses you out trading. That's not it for most people. There it is again, breakout down, close below, open below. The other one, the other side of trading is the I hope it doesn't go without me side. It's the it went down and I didn't get a short side. It's the feeling of missing out, the fear of being left out, right? So my triggers are still up. I'm still on the weakest side, right? There's the one-to-ones. If I get a close above, I've got both a mid-band and one-to-ones directly in front of me, right? That kind of sucks. I also have an outer band right there that I have to pay attention to. There's your close above. Let's see what happens. My rules say I can't take it, so I won't take it live. My rules say that's not my trade because I don't have a clear path on the 1 minute. Victor is saying, but maybe I'll take a late entry if this one closes. Get in around 24 or so and have my stop 30 points lower below the pivot high. All right. Let's see what happens. I can't take it. It's not in my plan. My plan doesn't say just jump in and the next bar up. My plan says pull back to an area, close on the correct side with room. That's what the KISS plan says, guys. What Victor's talking about is beginning to read indicators and alter plans. There you go. From 26 to 31, you had 5 points worth of room. Let's see what happens. Some of you might be in it. I can't. I am bound by law to not take this trade because it doesn't fit my plan anymore. I'm okay with that. We'll come back to it. We'll see what it does. We'll look at Adam's trades. 4 triggers passed. Clear path. Oh, Adam. Adam, hold on. Virtual high five. I love this. Took the reversal bar entry because of inside of triggers on the large chart. I'm not sure what that means. No areas inside of triggers, right? Is it going to hold? Is it going to hold? Is it going to go to here? Heck, I don't know. Adam, you got in on the close on the weak side of those small triggers up. One of the greatest advantages you can give yourself as a NASDAQ trader, and it's just down. Beautiful, beautiful trade. Your entry makes children sing. Nicely done. Now, did you take the reversal bar? I don't understand the language here. Because of inside triggers on large chart, it's not. The reversal bar is on the wrong side of the triggers as well. I know because your synthetics are the large chart, large triggers. Do you see how the language for entry isn't met? Pull back to an area inside of triggers. But if you're going to go with the large chart, that is the most brilliant entry ever. Don't fight the small triggers on the NASDAQ. I want to make sure. I think we talked about that. I did with somebody. Once you get beyond these triggers, you don't know if, when, or where that's going to go down, right? It didn't work, Victor? No. I don't buy it. Oh my goodness. It did. It worked right to the trouble you identified. It made it right to the trouble you identified. From the weak side, that's your trouble. That's exactly where it went, to the tick. And then it just Geronimo. So Victor, did it work? Yes. If you didn't manage it correctly, you didn't make money. But did it work? Yes. It went right to trouble from the weak side, where the very basic methodology says, what a great place to get paid. Trina, did you take it? Did you manage out at trouble? Cool. Adam, I'm sorry, I got distracted. I do that sometimes. Where the market shouldn't go. Wrong side of the triggers in a short trade, wrong side of the triggers in a long trade. This is, once you're there, the advantage is gone. There is absolutely no idea if, when, or where that market's going to go down or if it's going to go up. Does that make sense, Adam? We've been teaching this concept for a long time. So on your trade, your entry's on the wrong side of the triggers. And what happens is people say, well, everything is down, that fib has to hold. It doesn't have to hold, and it didn't. Well, then the mid-band's got to hold. It doesn't have to hold, and it didn't. And the reality is it could have gone to these one-to-ones, and it could have gone to that mid-band, and it could have gone to that fib, and once I'm up here, I just have absolutely no idea. Does that make sense? Everybody in the room, all my NinjaTrader users? That's why the language is inside of triggers. What you did is you forced the small chart to get in line with the large chart advantages. The large chart was beautiful. The small chart was iffy. Your close where you took it is brilliant, because now you're saying not only is the market starting down, right? Not only is it going in the direction of everything over here, but I'm also on the good side, on the money-making side of those triggers. And then it's pretty much effortless. And this is pretty cool. And I don't know if that's why you did it. But the reversal bar gives you a place to put your stop. That pulls the triggers out of the fight, and it just puts you back in sync with what the large chart is saying. I love this trade. I love the way you did it. I just wanted to make sure that you understood the logic behind it. Nope. Not why you did it, but you learned something. Awesome. You're smarter than you thought, Adam. So ask yourself this. Why didn't you get in at the fib or the mid-band? What made you choose this entry? Figure out what you were thinking, because this doesn't make sense. Figure out what you were thinking. And guys, when you tell me what you're thinking, if I don't understand it, I have to say, I don't know what this means. Help me out. But what happens is you start to see where your brain is and what it's thinking. The small triggers on the large chart were inside and not outside, so you waited. Okay, so you didn't have the advantage of momentum, so you waited for a close on the correct side. Took the reversal bar entry because you didn't have the best momentum. Right on. See, that makes sense. Now it makes sense to me. Thank you. I would say, more so than this, being here is going to be a bigger factor. So that was a good lesson. I think the biggest factor on this one is that you're already on the wrong side of the triggers. And once you get there, it's crazy. Whoo, look at that. Hey, Victor, breakout bar from the termination, open below the HVA line, down it goes. Trina, do you see it? We talked about, that's your look. Price reaches the termination, breakout bar, open below, blammo is the technical phrase for that trade. All right, it's up. It's weak. GTFO, room to profit. There's your pullback. There's your close above trouble. There's GTFOing right at trouble. Nicely done, Trina. There's no guesswork. Where is it nice knowing exactly where you have to exit your trade before you ever enter? Does it take a lot of the stress off? I think it does. I think knowing how you're going to manage your trade takes like 70% of the stress out of trading. Entries are easy. Entries are easy, guys. Learning the entry will take most people a week. Learning how to manage it is where the money is made. Directly into a VWAP, nothing to do. So guys, I'm going to take a few minutes. I'm going to walk a lap real quick, make sure my dog's good. When I come back, I'm going to go through a little bit on management. So we'll look at the live market. We'll definitely go through the live market, see what the live market is doing. Wow, look at that termination condition. From the same pattern. I love it. I love patterns. Uh-oh. There's a pullback. Man, that looks good. I'm going to talk a little bit about management when I get back. So if you have questions, man, do you really want to see your 15-minute zones on a 1-minute chart, Phil? Isn't there already enough on a 1-minute chart? How about that? There's my 15-minute trouble. And then I don't have to add more. And it lines up with a 1-minute zone. How cool is that? I love the trend lines, guys. There's your VWAP, right? There's my next zone. There's my 1-to-1s. If I get a pullback to the 1-to-1s into the zone, well, I can't take an entry above that. That's the cool thing, guys, is everybody sees and does things differently. Everybody has things that pop out. Everybody has things that they need a little help with. It helps you to miss less zones. I love it. I'm a look left guy. I always have been. No matter what I'm looking at, I'm looking at the big picture, and then I'm just letting this be my entry. And that's a habit that's taken a while. It's taken a while. Victor, you're below the VWAP and you haven't reached a zone. There is no HVA trade. Your small triggers are below the large triggers. There is no HVA trade. Does that make sense? I know you're looking now. So even if you get a white bar, large chart rules not met. Very important. I'm going to leave Renko up because it'll recenter itself. And I'll be back in just a couple minutes, guys. Stretch your legs. Home stretch. Big Rat. Let me see what he did. Multiple time frames, support and resistance. Let's see if we can figure it out. So on the small chart, I'm assuming it's going to be market dynamics. Enable FVG. Scrolling. There we go. Multiple time frame, support and resistance. He changes his time frame to the 15-minute as well. And then it puts you on there. So it's under Market Dynamics Pro, multiple time frame support and resistance, enable, and then you've got to do it for the 15-minute. You're welcome. All right, Boaz. Momentum, 3 triggers through. Pull back to an area inside of triggers. Make all the money. Perfect trade, Boaz. Perfect trade. Nicely done. You guys will start to notice that the people in this room that seem to be posting all the winners, all their winners look the same. It's not an accident. It's very much by design. There's no doubt in my mind there. It's very much by design. There's a reason. Because it has an edge, it has an advantage. And that's kind of what it's about. So guys, I want to go through a little bit of management real quick. Because what a great way to end the weekend, right? And everything that I'm about to talk about is right here in the spreadsheet. If you go to Client Trades, this is from the KISS plan. I want to talk about it in NinjaTrader. So my NinjaTrader traders, this is the management for a high probability trend trade. And it is just if then. That's all anything that we do is. Have you guys noticed that yet? Everything that I teach is if then. If the large chart has strong triggers, then I'll look for termination conditions. And if I don't have any termination conditions, then I will buy or sell the pullback at an area inside of triggers. Is everybody with me for this? If you're brand new, learn this process. Great entries create manageable trades. So if entry is 2 ticks below resistance inside of triggers, I don't know why I added the extra G, then the initial stop is 4 to 5 ticks beyond the triggers. This is where the market should not go. This is where the advantage of rule number 3 is no longer in place. You will know your risk before you ever enter the market. And I'm gonna address that real quick. What is risk? For some of you, it's a number, right? I'm only willing to risk $100. I'm only willing to risk $150. Guys, risk, that's the wrong picture. Risk is trading without momentum, clear path, and entry. That's risk. Trading into areas, that's risk. Risk is something that happens before you ever enter the market. Stops are where your advantage is no longer in play. And while you can say that's my risk, and it is a number, it's $150 per contract, what's risky is not taking the best entry. What's risky is not having an edge each and every time you pull. And I think that's one of the things that we've got to accept. And if you're not okay with $150 per contract, then you probably shouldn't be in this trade, because if you try to put your stop below areas inside of triggers, it's likely to get hit only to watch the market go without you. If you put your stop inside of the retracement zone because the number is more comfortable, there's a very good chance it's going to get hit and the market's going to go without you. So if I enter 2 ticks below resistance inside of triggers, then my stop is 4 to 5 ticks beyond. If you're a NASDAQ trader, 4 to 5 ticks may not be enough. It's a different chart. Someone asked me, well, what's a good rule of thumb? I don't know. Your entry chart is 3 times bigger on the NASDAQ. Maybe it needs to be 12 to 15. You'll have to figure that out. So entries create manageable trades. Great entries create manageable trades. If this is not one of your 20 to 30%, if you get a reversal bar in the direction of your trade, then you will move your stop 2 ticks above the reversal bar. This is now where the market should not go because the sellers are back in control. They are now moving in the direction of all of your advantages. Guys, your targets in the very, very basic KISS plan are $100 and $200, but you went from $150 risk per contract to $30 risk per contract. So before you ever entered, you knew what your risk was, right? You knew how you were going to manage it because you have a plan that tells you exactly how to manage it. There is no guesswork. It's all if then. And guys, if they don't get you for that tiny little loss, guess what? You made it to your first target. Now in the KISS plan, it says $100. Why? Because you guys stink at getting paid. You guys want the home runs every time. Base hits pay bills. If price reaches your first target, guys, one contract is automatically removed. Those funds go into your account. That's it. The exposure's gone on that contract. And with one contract remaining, you'll move your stop to break even. Now, if you know me, you know that language is important for me. Do you notice that nowhere on this do I say where the market should not go? Because that's an area inside of triggers with all the large chart advantages. You're going break even to have the courage to hold for your second contract. And it's either going to go or you're only going to make $100 on this trade. If it goes, guess what? It's $300 in a couple of minutes. Guys, that's your KISS plan management. It's 100% if then, the exact same way your entries are 100% if then. Learn it. Let's see what you did, right? Boom, boom, boom. Odds favorable. Jump in above trouble. Pulls back, get in on the good side. Everything is so strong, you're like, let's add some contracts. Cool. Out at trouble. Nice job. Trading the YM, I like it. A little easier on the senses. Nice one. 15 minutes, strong side. Take profit at 1-to-1s. Pull back to the area, close above. Easy money. Nicely done there too. Hold on. Target at previous 15-minute high. I like that. Pull back. But you get in on the good side of the triggers, above the zone, and you make it to targets. Pretty effortless trading. Why can't every day be like this? Big Rat, why can't it? Did you get lucky? Or did you just trade advantages? Is 100% winners normal? Not for most people. But every day can be that entry. Every day can be that entry. Every day can be that entry. Every day can be that recognition and target. So I'm going to say every day can be like that. The results might be different, but the day can be exactly the same. Does that make sense? Was that phrased the way I wanted it to be? Just tough right here. Guys, every day can be the exact same. It's so much easier on TradingView. It slows down on TradingView. I don't think NASDAQ is a home wrecker on NinjaTrader though. You know why? Can I tell you why? Because I'm so stinking in tune with my rules that I know that if I only have 2 triggers through and divergence, I don't even look. Because I know that if I have divergence from a 1-to-1, I don't even try. Because I am so clear on my rules that I don't put myself in a position to get run over on the NASDAQ. I don't hope stuff works when my rules say that it doesn't, right? I don't hope for more up if I've only got 2 triggers and divergence. I don't hope for shorts without the best momentum and divergence from a 1-to-1. It's crazy, isn't it? With 3 triggers through at 11:01, Where's 1101? There it is. I probably take that entry, but then when divergence prints, I exit. Guys, knowing what you're going to do before you ever do it is amazing. It takes all the stress out of trading. Knowing where you're going to get paid, knowing what it takes to enter, knowing how you're going to manage. Trading doesn't have to be difficult. I can't stress that enough. Trading is probabilities. The market doesn't know you exist. But I think we proved it today. Not that this is science, but that pattern in the S&P is the same pattern as the one we saw in the NASDAQ, is the same one that we saw from 2021. The market has a memory. We've cracked the code to the memory. It's momentum, path, and entry. Definitely doesn't know I exist. It has no idea any of us exist, Phil. The market, my favorite thing, have you guys ever noticed that when you close TradingView, it gives you a message? My favorite TradingView message is the market doesn't care about your position. That's my favorite message. The market doesn't care about your position. And it doesn't, not even a little bit. Why didn't I take the long? Because of divergence. That's it. It tells me that area is less likely to break. When it comes from a bad bottom, it's even more less likely to break. And now I've got momentum. And now, well, there's that divergence again at 1-to-1s. My plan says just be calm. Wait, don't do it. Relax. May not be your best bet. It's only 2 triggers. NASDAQ takes a little different approach, but the rules don't change. It just looks a little different. Here's all the momentum. Here we go, S&P. I've got momentum. I've got room. Does anybody see an area inside of triggers for entry? Help me out here. Does anybody see an area for entry inside of triggers? Rule number 3. The one that says, hey, once you get to the wrong side of the triggers, you don't know if, when, or where the market will go down. So let's see what happens. Let's see if they pull back. Maybe they bounce. Boaz used a reversal bar, or Adam used a reversal bar. When everything was perfect, said, you know what? This area could create a bounce, but it's on the wrong side of the triggers. I'll force it to give me a reversal bar. The momentum is great. The path is clear. Life is awesome. I just can't define an entry. How do I circumvent that? Well, if I get to one of these areas, that's perfect. But I won't jump in. I'll force the market to give me a down bar from the area on the wrong side of the triggers. Look at that. Bingo, bango. Can we incorporate that one on this one? If we get the pullback, you guys want to try it, see what happens? Now remember, once you're on the wrong side, the advantage of rule number 3 is no longer in play. Once you're on the wrong side, it could go all the way back up here. I don't know. It may go to the sky. Does that make sense? Now we're just at the mercy. Are they going to give us a pullback before they get to the blue line? I don't know. Doesn't look like it, but we'll see. I can't predict. What do you guys want to talk about? We got 45 minutes, guys. That's a Friday. We're just going to watch. There's going to be a lot of quiet. We either get it or we don't. It either happens or it doesn't. Either is or is not. How we feeling? Anybody in demo on here? Oh, here we go. It's on the wrong side. Shoot dang heck. Does a reversal bar even give us room? From 79 to 77? That's not a lot of room, is it? To get to a fib? We'll just watch it. We'll see what happens. How can you identify if it's a really good bottom or top? Well, we won't even use the word really. It's a simple recipe, Gab. You ready? Oh, we're going to do this. All right, so I'll give you this picture as well. So a strong top or bottom. And here I go with language again. A no triggers through termination that reverses the market. So if you learn this phrase, it's going to help. All right. So starting over here, triggers don't break. Do you see how it didn't reverse the market? Not a strong top. But here, triggers don't break, termination, where your large triggers roll from green to red, now it's a strong top. Price comes down, pulls back, there's your termination. Doesn't even have to reverse the triggers because they stay down. We could call that a strong top. Market reverses up. The market retraces. Triggers never roll. Gab, do you see that? That doesn't fit the recipe. That would be what we call a weak bottom. And from a weak bottom, very often, price continues down. Triggers get through, never reverses. That would be a weak bottom. And from a weak bottom, very often, price continues down. There was your reversal bar going down with. So if we scroll back, price reaches the divergence high, reverses the market. Do you see that as a strong top? First it's a termination, then it's a reversal. All right, now what about this one? The triggers got through and it reverses the market. Can we call that a weak bottom? What does it mean? It just means that they were able to push through. It means that that key area wasn't as solid. Why do we use strong tops or bottoms? I want to show you a good example. Man, the market has been crazy today. It's been a lot of fun. This is probably the best example. Strong bottom, into resistance, market continues up. Weak top, back to support, market continues up. Strong top, pushes down, they try to push again. So you start to see these patterns that emerge. Weak bottom didn't quite make it. They finished the move before they really push up. Weak bottom, couldn't make it. They finished the move down. So the strong top or bottom idea is rule number one for one of those trades with only the potential to break, because it means that it was so impactful that it reversed the market completely, and typically bigger moves come from it. Does that help a little bit, Gab? Awesome. There's not only one trade. There's only one trade that I give you guys that requires the strong top or bottom, and that's the 50-50. When you're relying on the momentum to break an area, that strong top or bottom totally ups the ante. Really gives a little bit of advantage. And once I get beyond those triggers, I don't know if, when, or where. There's a great example of it. Another management thing, guys. This isn't in the KISS plan. This is something that you're going to pick up along the way. John Novak teaches this. One divergence with the perfect chart doesn't faze me. A second higher divergence is an exit condition. And if I get a reversal bar, I can re-enter. And if I don't lose that trade. Second higher divergence is an awesome exit condition. It doesn't kill everything. It just takes you out in case they decide to push up to that next area. NinjaTrader users, that's a good one. Gab, strong bottom or weak bottom? Didn't make the termination, right? So that's a weak bottom. So there's a good chance this mid-band of resistance holds. It's not guaranteed, but because it's a weak bottom, they may be shooting for this fib, right? Which means for me, if I do decide to take a pullback to an area inside of triggers with momentum, mid-band's not a termination condition because the large triggers are not a full bar away. If I, oops, I don't have, let me put my stop in place. Because it's a weak bottom, the mid-band's more likely to hold. They're more likely to continue. I lose my edge. Got to put that 4 to 5 ticks. We'll take a bigger loser. Stop where the market shouldn't go. If I get a reversal bar, hold on, and we may get stopped out. If I get a reversal bar, my first target is at 86. My second target is at 88. That's the KISS plan. There's my reversal bar. Stop where the market shouldn't go. Kept me in the trade. So if my first target gets hit, I'll go break even, or I'm going to lose this trade. Does that make sense? We're watching the management come in right now. First, it's momentum. Mid-band is not a termination condition because the large triggers were not a full bar away. We entered just above the area inside of triggers. Stop goes 4 to 5 ticks below the triggers where the market shouldn't go. If they hit our first target, get up there. Then we'll go break even. If they hit our second target, it's a $300 trade. If they don't make it, I'm out break even. How awesome is that? Live in front of you. That is what we talked about. Why do we put stops where the market shouldn't go? Because the trigger lines define the retracement zone. Pretty cool. That's where I drop the mic and walk out. I didn't put my opinion in. I didn't panic when they pushed lower. All I did was follow the plan. Are they going to make it? I don't know. They might. They might not. Go. I'm rooting for them. Small triggers are up. Large triggers are up. Synthetics are up. Momentum is great. Haven't hit anything. Congratulations, ladies and gentlemen. You just made $300 on the highest probability trend trade you could ever take. Are there any questions about what we just did? If you haven't bought software yet, call your client advisor. I can't imagine why not. Miss Jen, termination, white bar, opens above, out at trouble. You know, I was thinking earlier I haven't heard from you in a while. Victor and Trina, do you see it? It's counter trend. That's a pattern. Jen does it really well. Good. You almost got a message today. That's the pattern. When you get good at trend trades, these jump off the page. Nicely done. Look where the market stopped and started bouncing. Whoops, get that out of there. Look where the market stopped and started its bounce. I guess so. Looked like it, Victor. Looked like it. Jen can answer in the room if she wants. Up, weak side, GTFO. I love it. Pull back to the area. Open, out at trouble. It is the same pattern, Trina. Breakout bar up. You have to wait until the white bar closes. You have to wait to see where the second bar opens. If you don't, how can you know that this opened above or below? No, not the next bar close. So check it out. I see what you're saying. When this white bar closes, my eyes are on where this bar opens. And Victor, if it opens below, I'm mashing my sell button if the rules are met. So triggers down, strong side, VWAP's your termination. There's your pullback. There's stuff in the way, right? But you could say because of the pattern, if it's true, that's my entry. But that's your close below right there. You guys should all be in a trend trade. If you're following rules, you should all be in a trend trade right now. HVA trade setup. So it pulled back, Trina, started to break below, came back and retested it. It's hard to see it, right? Historically. Okay, so it hit the area. Hit the area, that's it right there. White bar prints. Next bar opens below the high volume area, and down it goes. So your entry, Trina, would be right here when that bar opens, which means you got tons of room to trouble. Why on earth would you wait? That's your look. That's your look. You're welcome. But it has to be a large chart termination first, or it's just a white bar. No. The close below the small triggers, Paul, is below the trouble. It's trading from the area. Just because it's a white bar, guys, you can't just all of a sudden break all your rules. There has to be rules for the white bar. So, Paul, if your rules say don't trade into trouble, that's not your trade. It's the pattern, but it's not your trade. Your trade is the close below the small triggers. And I'm not even sure that one opened below, so it doesn't fit. But once you get the close below at 23, there's nothing in the way until 12. That's 11 points. That's $220 per contract. So no is what I'm saying, guys. You can't break your rules because of a one bar pattern. Your one bar pattern has to be supported by rules. Does that make sense? And one of the biggest things I saw when John Novak taught this is every white bar people were buying and selling and getting absolutely smoked. Every time they saw a white bar, buy. Every time they saw a white bar, sell. Right into areas, fighting everything, not from a termination. So, guys, rules are there for entry. Oh, look at that. From the bad bottom, Gab. Do you see it? Ha ha! They finished the move. From the bad bottom, mid-band resistance held, they finished the move. That's a pattern. We still made $300 with momentum and path. Isn't that awesome? Isn't that amazing? We called it. We predicted it. We knew where the market was likely to go based on patterns. I love this stuff. I get excited about it. That's Victor. Watch the video a few times, but yes, that's it. It's all shorts. There's just not even an opportunity yet. Let's see what's going on here. Well, that was just another beautiful trend trade. Hopefully Trina shows us that one, right? I don't need a white bar for that. Check it out, Victor. It's got to be rules, right? It's got to be rules. 15-minute termination. Smalls above the large. Breakout bar with an open above the HVA. Mash that buy button. That's got a good shot at being a bottom. Does that make sense, Victor? Guys, it's aggressive. It's counter trend. It's a fight. It's a fight. It's a fight. It's a fight. If you can't make money with trend trades, you're just going to drain accounts with this one probably. like a bad mother scratcher. Look at this. Everything says down. It's super strong. Pull back to the area. Close below. Making money. Easy peasy of the lemon squeezy variety. Phil, any stress in your life on this one? And from the strong side, you let it run a little bit further. You got paid. That's your job. But then you said, man, let's go to the outer band. Let's go to the big chart trouble. I love this trade. Do you need more than it? No. Are most of you going to look for more than it? Yes. I won't say any names, but do you remember when you passed the evaluation using nothing but trend trades? Do you remember when you made consistent money using nothing but the KISS plan? Do you remember when you never went counter trend and still found a way to get paid every day? Why are you so excited about going the other direction? After 7 days of following the plan, you got numbers for us, Phil? I love this. You went off the rails yesterday. That's okay. The rails and I don't even live in the same zip code some days. I'm so far off the rails. I've done it. We've all done it. The idea is to get back on it, right? We get excited. I get excited. Oh my gosh, I'm so damn smart. I can't wait to go counter trend, even though the rules aren't met. It should, right? It will. It has to. Triggers down. Transition. I'm below trouble. What do I need? I need to close below the small triggers to have a chance here. Jerry, good stuff, man. You tried trading NASDAQ Rinko and you got crushed. Today seems better. Trina, some days are tough. Some days aren't. Some days are easy. Some days you have to be more patient. Some days the perfect trades don't work. Some days crappy trades work. That's trading. But what if you did the same thing every time? Couldn't you at least say it's on the market, not me? If you took the same entry every time, it's just because the market's wrong. It's not because you made a mistake. That's the hardest thing to do. That's the part about day trading. Victor, that's your termination. That's your white bar. Did you see how it opened above? I'm not taking this trade because the smalls are below the large. But once that opened above, if the rules were met, you are already long saying, I hope that market goes up because of this termination, because of that pattern. But this one doesn't have the rules met. But that's what you're looking for. And I just gave back everything that we made on the right trade. Got 20 seconds. 15 seconds. 13 seconds. 10 seconds. I'm so calm. 6, 5, 4, 3, 2, 1. Patience. Didn't give me my entry. I don't take the trade. No matter what happens in the next 56 seconds. Didn't give me my entry. My rules say don't take the trade. It's almost too easy. Whew. What a good week. Did you guys have fun this week? Did you learn stuff this week? Guys, I love the live market reads. I really do. It's important to me that you guys get rules as well. But I love doing this. This is fun for me. Live chart reads are amazing for me. It's such a good time. Didn't get a close below. Look what's happening. You can eliminate the stress from your trading. Once you trust. Yesterday I did a video. I do the shorts. I try to do a video every day. And I did one yesterday based on everything that we did in this class, guys. And it's about trust. It's about believing that your plan gives a statistical advantage. It's about recognizing that you're never in control. And sometimes you have to wait, and sometimes it's gangbusters, right? Trina said today has been really easy. In 35 seconds, I'll know whether or not I have a trend trade here. TradingView gives you the ability to do absolutely nothing until it's time to do it. Got 20 seconds, guys. If I get a close around 73-ish, because it's not prairie dogging, what it is it's trading from the area, the pullback, and then the close below. But it doesn't look like it's going to give it in the next 6 seconds, so I don't have a trade. That's why we don't trade into areas. Pretty cool, right? That's why we wait for closes on the correct side of the triggers. Well, that's why the plan says. You guys may not. That's up to you. All right, I'm going to get you today's video. Let me end that broadcast.